Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, currency analyst at MUFG. It's Monday, 20th September 2021, and joining Lee to pose some questions on the financial market themes for the week ahead is Simon Mays, Director of MUFG's Global Customer Marketing Group for EMEA in London. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Good morning, Lee. The main focus this week looks to be the FOMC meeting on Wednesday. Given that we've seen some recent dollar strength and it looks as though the markets are tentatively positioning for Fed tapering, followed by rate hikes further down the line, do you see this view being backed up by the Fed this week?
Hi, morning, Simon. Yeah, certainly. I think the market is going to be watching very closely to see how the Fed provides an updated policy signal this week. In terms of the kind of quantitative easing, tapering plans, we're kind of in line with consensus in that we think it's probably still too soon to expect the Fed to announce those plans as soon as this week. So we're not expecting that to be a kind of a market mover for the dollar in the week ahead. But I think what will be more important will be the updated dot plot projections from the Fed. Those will give us a kind of clearer indication in terms of the potential timing of rate hikes going forward. I know, obviously, recently Fed Chair Powell has kind of tried to emphasize that a decision to start to taper QE doesn't necessarily mean that they are kind of moving closer as well to raising rates. But I think for the market, it's going to be difficult to kind of really kind of differentiate those two things like Powell would like. So I think the updated dot plots this week will be kind of important in providing kind of further market insight into the potential timing of the first Fed rate hike. So that to us is going to have the biggest implication on dollar performance. And that's, I think, been the case recently. If you look at how the dollar has performed, the strongest correlations have been with the US short rates. So I think the updated projection for the first Fed rate hike is going to be key. If you remember back to the last meeting in June, the Fed signaled that the median dot plot for rate hikes next year was still for no hikes next year. But there were, if you remember, 7 members of the Fed did favor one hike as soon as next year. So by our kind of calculations, it would only require a shift by 3 other Fed members to vote for a hike as soon as next year for that median dot plot to show a hike as soon as next year. And while that's not our kind of base case scenario, it is a very kind of close call. And if that hike does shift into next year, I think that would be the kind of most kind of would have the biggest impact on the FX market, when we'll likely see the dollar strengthen quite sharply and could lift the dollar index up to the year-to-date high for this year.
Thank you. I guess we shouldn't forget as well that there's a whole raft of other central bank meetings this week, including the Bank of England, Bank of Japan, SNB, Riksbank and Norges Bank. Where do we see the biggest market-moving risks aside from the FOMC meeting this week?
Yeah, I think the Bank of England meeting potentially could have more kind of interesting implications for the market. Certainly as kind of a backdrop ahead of this meeting, we have seen a very kind of hawkish repricing of Bank of England rate hike expectations. The first hike now for the Bank of England is expected as soon as May of next year, and multiple hikes are now priced in by the end of next year. So we would say there's a lot priced into the UK rate curve right now, and that obviously has helped to support the pound. But we think it makes it very difficult for the Bank of England to kind of meet those hawkish expectations this week. We're not expecting the Bank of England at this stage to provide a kind of clearer signal that they are moving closer to raising rates at this point. To us, it would make sense for the Bank of England to kind of wait and see right now to see how the kind of labour market here in the UK holds up once the job furlough scheme is set to end at the end of this month. So in the next couple of months, we'll have a better sense to see how the labour market is holding up. Similarly as well, if we look at the kind of latest data from the UK as well, that has been more mixed recently. If anything, it's been kind of more negative in terms of we've had higher than expected inflation and further evidence of a loss of growth momentum over the summer period. So to us, that would make us more cautious about the Bank of England kind of signalling more strongly that they're thinking about raising rates as soon as this week. So if we don't get that kind of clear signal from the Bank of England of a hawkish shift this week, then I think there could be some disappointment, and that could see some pound weakness later this week.
And moving on to the political arena, we've covered the Japanese LDP elections previously, but more imminently we have the Canadian elections today. It looks like a tight race between Justin Trudeau's Liberal Party and the Conservatives. How do you see this panning out, and what impact may this have on the Canadian dollar?
That's right. I think it looks like it's going to be another relatively close race in the election today in Canada. Certainly at the kind of national level, the polls are showing kind of a very tied race between the Liberals, who are just kind of marginally ahead of the Conservatives. But if you look at the kind of regional breakdown, similar to back in 2019, that is pointing towards a kind of clearer advantage for the Liberals at a regional level, which points towards the Liberals likely regaining their position in power, but still as part of a minority government. If you remember, obviously, Prime Minister Justin Trudeau, his decision to kind of hold a snap election was to try to win a majority, but it looks very unlikely that will be achieved today. So it looks like we could be back in a kind of similar situation as we were kind of pre-election. In terms of how that's likely to impact the outlook for the Canadian economy and the Canadian dollar going forward, well, most of the major parties, the Liberals, the Conservatives, and New Democrat Party, they're all basically their pledges pre-election are that they are looking to kind of back further government financed spending, which would help to support the growth outlook in Canada in the coming years. Explicitly, if you look at the plan for the Liberal Party, given that they're the favourites to remain as in power, their policy platform stated that they would add a further $70 billion of federal debt by 2025-2026. And that was on the back of promises of additional $78 billion in new expenditure and $26 billion in new revenue. So this, we think, will likely lead to some additional support for growth next year. Could lift growth in 2022 by about 0.5 percentage point. So if that does kind of play out, that obviously would be favourable for the Canadian economy's performance going forward, and could certainly encourage the Bank of Canada to continue with their plans to further tighten monetary policy. So we're still kind of sticking with our view that there will be one of the kind of first G10 central banks to raise rates, and we think that's likely from around the middle of next year. So that kind of supports our forecast for a stronger Canadian dollar heading into 2022. But I think in the very near term, if we look how the Canadian dollar's performed over the last couple of weeks, month or so, it has been underperforming as global growth concerns have been in focus. And I don't think even if we did see a positive election outcome today, I don't think that's likely to kind of alter the very kind of near-term dynamics for the Canadian dollar, which is still more likely in the very short term to remain trading on a softer footing.
Thanks very much, Lee. It certainly sounds like we're going to have a very interesting week ahead.
Yeah, thanks, Simon. Good to speak to you.
Too.
Thank you for listening to this MUFG Global Markets podcast. Rate, review and subscribe, and contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research Team.